philsgang.com.
philsgang.com.
You want to invest your money and grow your wealth. How do you invest intelligently? The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
There's a reason why rates are rising. Rates are rising because the economy is fine.
Rates are rising because the economy's fine. It's unbelievable. These are professional BSers. Unbelievable how they just sit there and lie. Isn't that stupid? How can they say something that stupid? These people on these TV shows, that's stupid.
There's a reason why rates are rising. Rates are rising because the economy is fine.
No. The rates are rising because they're trying to fight inflation, which they lie about. As Powell did on January 15th. Inflation's gone. Or he didn't say gone, but inflation's coming down, he says. So much so, I'm going to start cutting rates for 2025. I'm going back to 25 cuts, 25 basis point cuts. We're doing so good. We're doing so good. And what? 4 weeks earlier, he's saying, for 4 years I've been trying to hit my rate inflation target of 2%. I can't do it. Over 4 years, I failed. 4 years, I can't get it done. But in 4 weeks, he got it done. And the market went up 700 points. And they came out with this phony CPI number, just like the phony job number comes from the same place, same crook, same place, the BLS, which is controlled by the White House. Every president controls the BLS. They have the keys to the closet, okay? Economy's good. No. So the reason that we have rates go up to fight inflation, and we're going to have even more inflation. Before I forget though, I want to remind everybody. What's interesting was on it was December. December 13th, 24. The S&P was around 6,051, and I said 6,200 is where the market's going to go to. We're going to rally to 6,200, and then I said that should be your warning, 6,200. But I may be wrong. I've been thinking about it. It could go even higher. Why? Do you remember what happened when Trump came into office? When he came into office in 2017, remember, from 2017 to 2020, we had a near 50% rally, 49%. Why? Because what did he keep saying? What did he keep saying? Every day he kept saying, I'm going to cut taxes. I'm going to cut taxes. It drove us nuts. Every day he says, going to cut taxes. Market goes up. Every time the market came down a little bit, he said, I'm going to cut taxes. I'm going to cut taxes. So I was thinking about it, and I'm going, this market 6,200 should fail for a ton of reasons. Not only is inflation going to go high, there's no question about that, and our 10-year Treasury yield is going to reach 5%, a high probability of that. How can it not? How can it not? For God's sakes, the deficits are going to go from 1.9 trillion to 82 trillion in 10 years. Our tax cuts, those are inflationary. You want to know what's really inflationary? Tariffs. And that's all he talks about is tariffs. We need them, but they're terribly inflationary. But you know where the biggest inflation is coming from? There's no more repo office. That's right. There's no more repo facility. You think of repo, they make it so complicated when they try to explain. All it is the Federal Reserve opened a little bank, and it said to all the large banks, and insurance companies and hedge funds and said, look, why don't you take your money, your extra cash, put it into our little facility, repo facility, and you get some beautiful interest overnight. Sounds great, right? They take the money back out the next day. But that's not the purpose. They did that so they could loan money to the government on a one-year loan called the T-bill. Okay, that's why they did that. That's how government was able to borrow money cheaply. Well, now that's gone. There's no money in there. So talk about inflation. So they can't go borrow money, go to an auction, because if they go to borrow money at a 10-year rate right now, the country would be broke. So they can't do that. The only one place you can go borrow money now is nowhere. They print money. They're printing money. The Treasury's printing money and lending it to the government, and then Federal Reserve's cutting their rate. He's cutting his rate because he controls it right down almost nothing for the government. So how can you say we're not going to have inflation? We're going to hit 5%. But the point I'm making is we could still have a big rally in this market. We had almost a 50% rally when he first got in office the first time, because rate cuts, tax cuts. Now what he may start saying is two things. We may get a double barrel. He's going to say, oh, Powell was going to cancel the tax cuts, which he was going to, not Powell, I'm sorry. Biden was going to cancel the tax cuts, let them expire. He's going to let them expire. But now he's president, he's going to say, but I'm not going to let them expire. So all you're going to start hearing soon is that, I'm not going to let them expire. I'm not going to let them expire. And the market will go up and go up. Then every time it comes down, you say, I'm not going to let them expire. I mean, this may go on for a year to get the market to rally more. We don't know. And then then the other night, what did he say? Just a tiny statement. Somebody in the press corps said, hey, what are you going to do about rates? He said, well, I'd like to see them come down, and they're going to come down. They may come down on their own. And she said, well, are you going to force Powell to cut rates? Because Powell said he won't do it. He said something to the effect, well, I think I can twist his arm. And as soon as he said that, the market shot straight up. When we had all these things that the market should cause the market to go down. So my point is, don't be surprised we don't get a bigger rally here. We could, and that's okay. We'll make money. But also remember that it's very important when you're trading stocks that you understand and you learn how to use your volume and your stochastic, okay? And my Pro 2 color-coded chart will help you with that, because they can rally this market, okay, and very easily. And you want to know, okay, when they rally, how do you know it's the time to get in so you don't get killed? Give you an example. Let's take Caterpillar, okay, and DE. Now, Caterpillar, I don't know if they can see this or not. Take Caterpillar. They can see, okay, great. Let me do this here. Get my Caterpillar up here. Okay, so this is very important. Here's Caterpillar and here's DE. Okay, now, a couple things I want you to know. Now, here's Caterpillar right here. Now, see how this was rallying and it was red, our Pro 2 color-coded chart? It told us do not go in and buy because there wasn't enough institutional money buying. And it makes sense because the institutions aren't going to buy now. I mean, they're not buying because the PE ratios are insane, for God's sakes. I mean, the PE ratios have gone absolutely nuts, okay? And let me just find where I had the PE ratios here. I had them for you somewhere here. Let's see. Okay. All right. I think the PE ratio, maybe you got the numbers here, Willie? Oh, yeah, right here. Okay, the PE ratio on the S&P right now is at 30. 30. Are you nuts? At 30? Okay, that means investors are paying 30 times higher than its earnings. And the average historically is 23. Let's take NASDAQ. Do you know what the PE ratio in the NASDAQ is? 38. You know what historically it's been? About 22. And that means investors are now willing to pay 30 times okay, higher than the earnings. That's insane. I mean, and that's why they're not buying right now. The institutions stopped buying. They're not contributing because they're not nuts. They're not going to go in and pay. Investors aren't going to pay 30 times higher than the earnings. But see, the tourist investors don't know that. They don't know that. They don't know anything. All they know is when they hear the hype, and all they got to hear, the tourists hear, oh, they're going to cut rates. They're going to cut rates. Just one little sentence, cut rates. Boom, market goes right up again. So you got to be very, when you see your stock going up, and you can see it right here. Here, take a look at Caterpillar. We said, don't buy it. Look, it's red. Don't buy it. There's not enough money. What's that mean? Well, when it's red, it means as it goes up the next morning, let's say at $384, it closed that night. That next morning, it could open up at 300 because there's not enough money in to keep it sustainable. You want to wait till it turns green. Well, how do you know it's going to turn green? Well, look down here. See this stochastic right here? When that red line starts turning yellow, it will turn green. This is our Pro 2 color-coded chart. We're the only ones that have this. But so as long as you watch, make sure you got better than average volume. So when your stock's going up and you want to know when should I buy it, it's going up. Wait till it turns green. Make sure you got good volume, above average, and make sure that red line is crossing the yellow, and you'll have a good trade, and you won't be in danger. But what's going on right now is again, there's a very the valuations are insane. We have, and we have. I mean, there's just nothing out there that we're getting a good message. I mean, the S&P right now. Think about it. The only reason why the S&P goes up is because of the Magnificent Seven stocks. If you pull the Magnificent Seven stocks, 4,000 stocks wouldn't go up. Yeah, we have an average of about 4,000 stocks to trade today. They wouldn't go up without the Magnificent Seven. And the Magnificent Seven controls about 30% of the S&P. So things are getting a little crazy. So, but it doesn't matter to us because we're just going to follow the money. And I designed this chart 25 years ago to follow the money. Okay, so back to the Trump. We gotta see if we're going to have that Trump rally, and it could really occur. It could happen. Okay, so we got to be very careful about that. Now, the other thing that's going on too, remember, is since 2009 to January 2022, the market rallied. I think was what was that? Well, 2009, 2022, I think it was 160%, something like that. But remember, when it rallied like that, 600%. But you know what the rates were? The average rate wasn't even 2.5 basis points. From 2009 to 2022, we went up over 600% because the average rate was about 0.08, 0.8%. Can you imagine? And we only hit 1.5% one time, and then it dropped right back. So everybody is so spoiled. Think about it. From 2010 to 2022, interest rates, they always brought them back to close to zero. So most people that are in stocks, that's all they remember. And so all anyone has to say is, we're going to cut rates. Just anticipation of a rate cut, the market goes up. And so what's happening is the tourist investor who doesn't know what they're doing, it looks like it's so easy to make money in the market. It looks like the market's never going to come down again, and they believe that. It's never going to come down again. For every one person who's selling a stock, there's 100 who's buying a stock. It's gotten crazy. So there's going to be a lot. We still can make money on the way up. We don't sit around here waiting for the market to crash. As long as we get our buy signal, just like I showed you a moment ago, as long as our stochastics cross over, our volume's good, we turn green, we're buying. But there is going to be one hell of an opportunity to short this market because this is going to be the biggest crash ever. And everybody says, well, you've been saying that for a long time and it hasn't crashed. Well, come on. So what? So what I've been saying is going. I never said, oh, by the way, the market's going to crash next Wednesday at 1:15. I'm right about the crash. It's going to crash. There's no question about it. So to be very careful And you got to you got to hear what Trump keeps saying. And if he starts saying again, oh, I'm going to make sure the tax cuts, they're not going to expire, and you start seeing the market move up every time he says that, then you know the market will go up big time. And even though everything is against the market, including the inflation. Remember, inflation is going to go up big time because the government no longer can borrow money at the repo bank. They can't borrow money. It's not available anymore. That's why, the biggest reason why inflation is going to go up, because they no longer get that cheap money. So anybody tells you that inflation's coming down, they're insane. Insane. All right. Join my gang, Phil's Gang. Check it out, philsgang.com, where you're going to get some great classes, some great stocks, and it works.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When making wise investment decisions, Phil Grande has some sound reasons you should join Phil's Gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. Okay, so we got to be very careful. Every time you buy a stock, you better take a look and identify, okay, is my stock compatible, how compatible it is with the yields. So in other words, if you're going to buy Home Depot, you want the yields to be going down. You're going to buy the banks, you want the yields to be going up. But does that always work? No. Sometimes you can buy Home Depot with yields going down, okay? And all of a sudden you think it should go up and it goes down. The best way to protect yourself, okay, is follow the money. And people say, well, how do you follow the money? Whose money? Well, you follow the institutional money. Big hedge fund money, mutual fund money, 401k money, insurance companies, biggest banks. You follow their money. How do you do that? Well, you follow it by using a chart. But no one has the chart except us, because I designed it 25 years ago. Now, I'm not just saying this to try to sell my chart. Yes, I am. So, now, there's been some knockoffs, okay? but they're not my chart. 200,000 people used this chart in the past 25 years. That's a minimum. So it works. So when you have trailing PE ratios, forward PE ratios, PE ratios, price to sales, price to book, return of assets, return on equity, all that crap they used to make us do years ago. You go pile through papers. Gee, I wonder what the free cash flow is. Is the free cash flow better in this company than that company? Gee, I better find out how management's doing. I wonder if management's doing any good. What do I check? I better check return on assets, see what the return on assets are. I better check that, see what the return on equity is, see how good management. You don't use any of that. The beautiful thing now, you don't have to know any of that. None of that. You don't need to know it. The one thing they're never going to tell you, your broker, your planner, or whoever manages your money, they're never going to tell you that. Because, again, they want you to think you can't do this, that you need them. How's that working out for you, especially you folks with 60-40? You know 60-40 is so terrible. Here's what we're going to do. Come into the office and we're going to rearrange your portfolio. How about that? Right before the first of every year. Why don't you come into the office, we'll reevaluate your fund. And what do? They still keep you in bonds. Bonds. Bonds, since 2020, are down 50%. So if you're in a 60-40, you're screwed. You know how many people they put 60-40? Almost everybody. And then the people, think about it, who are 98.99999% of people are in these programs where you buy these dividends with high yields, high yield dividends, and they take parking space in your head like, oh, when you retire, think about it, you're gonna have all these dividends coming in, and oh, by the way, while you're working. And you have the dividend program we put you in, don't worry. If your stock goes from $100 down to $10, don't even worry about it. Because you got a dividend. Makes up for it. This is how they sell this crap, this garbage. You have a dividend. Do you know if you were in a program in the last 2 years, these high-yielding dividends, check and see how much better you would have done if you were just strictly in the S&P. Just in the S&P. You lost money. That's right. The worst product is the high yield dividends. It's a terrible product. And the 60-40, terrible product. Bonds are awful. And most people don't even know how the bond market works. They have no idea how the bond market works. And 401ks are the biggest loser of all. The biggest loser of all, 401ks. They're garbage. Even Ted Brenner, who formed this thing in 1981, he doesn't even let his name go next to a 401k anymore because he says it's a ripoff. You got revenue sharing, wrap fees, finder fees, shelf space fees, surrender charges, soft dollar fees, 12B1 fees. You pay for the Christmas party fees. You pay for the parking fees. You pay for the toilet fees. What a screwing, these 401ks. Boy, when they took you off the pension fund and put people in a 401k, unbelievable. And most people didn't even know the 401k is a tax code. It's a stupid tax code. And they go and they buy these, and your company goes and calls the mutual fund industry, and they send a salesman over, and they say, look, we got a 401k, and Johnny just became an employee. We got to give him his 401k. Give me your worst 401k. Mutual fund. Give me your worst mutual fund. Why do they ask for the worst mutual fund? Because they pay nothing for it. Almost nothing for it. And they can mark it up and make a fortune. It's the biggest scam in the world. The only way you can make money in the stock market today is if you just follow money. You're not going to make money with a 60-40 portfolio. You're not going to make money holding on the most popular high-yielding dividend programs. You're not going to make any money. Don't believe me? Do the research. Now, the worst thing for the stock market is inflation. And they're lying to us. They're telling us inflation's coming down. That's a big BS, excuse my language, bullshit. It is. Sorry about that, but it is. Inflation coming down What are you nuts? It's not coming down. Inflation's going. Let me ask you, how could inflation come down when our deficits in 10 years are going from 1.6 trillion, what they are this year, up to 89 trillion? How much is that a year? That's huge inflation. But the biggest inflation is coming from the from where the repo bank, we will call repo bank, has been shut down. There's always been usually 2 trillion, 3 trillion in there. Because the big banks, insurance companies, hedge funds, they used to like to plow their money in there at night. And they get a nice little, overnight, they get a nice fee, make some good money. But that's all gone. It's gone. There's nothing left. But that was all done not to really give them the fees. You know what it was done for? To have a place for the government to go borrow money really cheap. So now they can't even go to the bond auctions. You think they're going to go to a bond auction and pay what, 4.6, 4.7 for money? They can't do that. So all they're doing now is printing money. Yeah, you and I printing money. Then we loan the government money. You call inflation? Nothing worse than printing money. Nothing worse. That's very inflationary. So again, you've got to remember that the stock market is a great place, but you got to stop listening to these programs, these CNBC and Kramer and all these people. They want you to be dependent upon them. That's why they make it look like investing in stocks is so complicated. And you just give up. I'm going to get myself a broker. And everybody's always looking for the broker, best broker. Hey, who's your broker? Oh, who's your broker? Who's your broker? They all suck because they're not on your side. The brokers don't do work for you. They do it for themselves. The only time a broker is on your side, okay, or a manager's on your side, money manager, if you have a minimum. It used to be $1 million, no more. You got to have $1 million of 2, 3 million. Then they'll pay attention. Then they do research for you. They will take care of you. But if you're someone, the average person right now, 70% of our workforce is losing money. 70% of our workforce is going paycheck to paycheck. The top 1% of our population control 80% of our stocks. 80%. So how are you going to make, you're not going to make money with a 60-40. You're not going to make money with a high-yield dividend program. You're not going to make money giving to go in some stupid 401k. You're not going to make money that way. The easiest place to make money is if you take charge. Yeah, if you take charge. But trying to convince somebody that's almost impossible. We've been in business for over 25 years. It's almost impossible. It's almost impossible to tell them that. And it's not hard. Here, let me show you something. Let me show you something. And it's not hard. We teach this all the time. I mean, how hard could this be? See this right here, this chart? This is called the Pro 2 color-coded chart. As I said, there's knockoffs, but this is the original. Over 200,000 people use this. It works. It's a simple color-coded chart. When it's red, you don't buy because there's not enough money. A lot of times you'll see it's going up and it's red. Don't ever buy it when it's red. There's what they call a sweet spot right here. See that little sweet spot? That's terrific, that little sweet spot right there. That's where the professionals make most of their money, in the sweet spot. What's the sweet spot? The sweet spot on a chart is where the low-hanging fruit is. Think of it that way there. When they short stocks, the banks and the big boys, everybody shorting stocks, they have to go buy them back. So if I made $5,000 shorting a stock, and the banks made $10,000, and these guys made $100,000 shorting stocks, they don't make money until they buy it back. So we want to be sitting right here waiting until it turns green, right between these little lines right here. That's called the sweet spot. That's where the most money comes in at the fastest rate. Right there, the most money comes in at the fastest rate ever. And that's why there's very seldom do you ever lose money in the sweet spot. So when it goes from red to green, we buy. we buy. Okay? And it's just the opposite when we sell short. You got to learn how to sell short. Just the opposite, sell short, it turns red. Now, let me see if I have my other patterns here for you. I don't know if I took them off or not. Let's see. Yeah, they're gone. Okay. Let me see if I get the other patterns for you that you're going to enjoy. I mean, this is it's not hard trading. All you got to know is, how does the bond market work? If you just know how the bond market works, it makes it so. And listen, I can teach you how the bond market works in 30 seconds. Not hard. Not hard. All right, let me see if I can find those charts for you, the flag pattern. Where did we put those this morning? Here we go. I think I got it. Yeah, here we go. Here's a pattern. This is called the flag pattern. This is one of the easy, you make a ton of money if you just wait for the flag pattern. Look at this. It looks like a flag. See it right here? It looks like a flag. In other words, you've got your, see the flag right here? And it looks like, and here's like the flag poles right here. See it? Right here's the flag pole right there. See it? And here's your flag. It's called a breakout. It's called the breakout. And we'll know when it's ready to break out. And that's how this is one of the best patterns. There's three. I'm showing you the three best patterns. That's a flag pattern right there. Anybody can do this. You just get my Pro 2 and it works. Try it for 10 days, for heaven's sakes. Okay, here's another one. Here's another pattern right here. This one we just made money on. We made about 20 to 30% return on this one. This one here is GEV. It's tied to AI. This is GE. This is called a consolidation pattern. See it right here? And see how it was red? That means there wasn't enough money coming in. Don't buy, don't buy. Then when it turns green, it's telling you, okay, now you can buy. And then when it went sideways like this, it's telling, oh man, we're going to get a great trade. It's either going to break out and go up, or it's going to break out and go down. So if it turns red, you're going to short the hell out of it, and it's going to drop. You're going to make a ton of money shorting. If it's going to break, there's only two ways it's going to go. It's either going to break up and out, or it's going to break down. If it breaks down, it will turn red. This is called the consolidation. If it turns red, you're going to make a ton of money shorting it. If it stays green and breaks out, you're going to make a ton of money going along with it. And the flag pattern I just showed you is the best, So when people tell you can't manage your own money, of course you can. But we're here to help you. We'll show you how to do it. Now, again, as I told you earlier, don't be surprised. You don't keep hearing, and you got to watch this closely. Make sure you're watching the bond market. If bonds start going up, the 10-year Treasury's going up, that's going to be tough on the stock market. Okay, 10-year Treasury yields go up, unless you're in banks, because banks like higher yields. But listen for Trump to keep saying, if he starts saying, don't forget, I'm not going to let the tax cuts expire, this market could keep rallying. That's what we got to listen for. Hey, thank you for listening. Join the gang, free for 10 days.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.